Friday, March 3rd, 2023, Medeco 64, home of alternative economics and contrarian views. Today we're going to look at how Andrew Bailey, the governor of the Bank of England, has just confirmed that the pound is going to zero. Yes, going to zero. And it's not just the pound, of course, it's all the other major fiat currencies. So we're going to look at that today. Before I start, just wanted to let you know, the other day I was out on the high street and I found one of these, a combi bar, 100 grams of silver. It has 101 gram little bars. If you want to know more about the combi bar and my purchase, I did a video about it and it's up in the cards. Go have a look. Before we get into this video, here's a quick shout out to Gold Investments, our UK precious metals partner. You can learn more in the description below how to get in touch with them. So, house prices, yes, I've spoken quite a bit about house prices in the last 12 months or even more. And mainly because I saw interest rates rising last year. Well, they started at the end of 2021, beginning of 2022. They're still very low at the time, but the pace at which they were rising, and that's not the Bank of England rate, but bond yields, government bond yields, was rising very sharply and very quickly. And with all the inflation that we have, I wasn't surprised. For those of you who don't know, I worked for 20 years, or over 20 years really, in Switzerland and in the city of London, mainly covering bond markets for my clients, government bond markets. So that's something I'm very familiar with, and I can tell when there is distress in the bond market, and bond yields, government bond yields, gilt yields will affect, of course, mortgage rates. And yeah, and that's why I've been saying the house, the party is over for UK house prices. And I've got four videos of those. This is not going to be part 5 because it's going to be a bit different. I'm going to talk about why it looks like, despite really high prices, rising prices, which people call inflation, which is of course wrong if you've been listening to me. Inflation, of course, is the creation of currency out of thin air by the central banks, by the commercial banks, and by government overspending, running huge deficits. That's what creates the inflation of currency. And if the economy doesn't keep up, the private economy doesn't keep up in terms of producing goods and services, of course prices will go up. It's a simple law of supply and demand. You don't need an economics PhD to understand that. But be as it may, a lot of people still talk about this as inflation. As you can see, trueflation in the UK, according to these people, is 17.15%. You might say, well, they're not the Office of National Statistics. But even the Office of National Statistics is reporting that the retail price index is up almost 15%. The retail price index is really indicative of the average household's cost in the UK, not the CPI. CPI was introduced by New Labour back in the late 90s to try to fool people. And the CPI is on average 1 to 2% lower than the RPI. And right now it's about almost 4% lower. So I would say this is a much better indication. So with this, with what's going on, and we saw yesterday the CPI in the EU was higher than expected. So prices are not coming off. That's despite the fact that energy prices have come off a lot in the last 6 months, and people say, oh, inflation is caused by energy prices. Well, they're wrong. But I was very, well, not really surprised, but surprised at how quickly he came out. Andrew Bailey signals no pressing need for more UK interest rate rises. Bank of England governor says the economy is evolving much as we expected in pushback against markets. I'm not going to go through the whole article. Just the headline should show you that he's not serious about fighting inflationary pressures, because in a free market for credit, interest rates, or under a central bank that is competent, what you'd have to really squash inflation and rising prices is a base rate higher than the rate of inflation, or the RPI. And I would use RPI because that's the one that most people feel it, and it's the one closest to true inflation. So interest rates have to rise above that. So we'd need at least 17 to maybe 20% interest rates. But can you imagine what that would do to the real estate market, which is the UK economy, really? The real estate market or housing market collapses in the UK, and it's good night Vienna. So why did he come out now, even though rates are only at 4%? Well, because of this. UK house prices suffer biggest fall in more than a decade as higher interest rates bite. Nationwide figures show a greater than expected 1.1% drop year on year to February. So there you go. I wasn't wrong, and I'm not like trying to look clever. It's just you look at what affects house prices. Well, it's mortgage rates, and you see yields going up like crazy. The 10-year yield. UK rates have gone from below 1% to over 4 or even 5 during last year's gilt crisis. So it's not difficult to deduct that house prices are going to suffer. And I spoke about that the Bank of England was going to sacrifice the pound, that it was going to go to zero. And you might be thinking, how can it go to zero? Well, I found this good page here, and I'll tell you about it. You can use it yourself. It's called fxtop.com. And I'd never seen it before. Someone showed it to me the other day. You learn something every day. And you can price the pound in terms of gold. So instead of having the price we always look at, let's say in dollars or in pounds, like in pounds it's around 1540, I don't know. You look at how many grams of gold the pound will buy. And it goes back to 1953, this chart. So you can see that back in 53, a pound would buy almost 2.5 grams of gold. And look at it now. We're buying 0.02 of a gram. And what's interesting here, and that's why I said the pound's going to zero, is because it's lost 99% of its value versus the gram of gold in those 70 years. And I think the last 1% is going to be very painful, and we're in it. And do I think Andrew Bailey is looking to do this to drive the pound to zero? No, he's just trying to keep the Ponzi game going, the debt game going. He's trying to keep house prices from collapsing. And I think the zero pound will come as a consequence of that. He doesn't really understand the basics of currency. He doesn't understand hyperinflation. When you have a hyperinflation, that's when people lose confidence in the currency and they don't want it anymore. That's when it goes to zero. And yes, house prices will go to infinity, but no one will be able to buy them except people with things like that and gold with real money. Real money will survive. The fiat currency will not. And this is not, I'm not having a go at the UK, and I live in the UK. I've been here for over 30 years, and it's my home. Because, and I'll show you, this is happening everywhere, even with the mighty dollar. This is the same chart from 1953. the dollar has outperformed the pound. It's only gone down 98%. So there's a little more room. As you can see, back in 1953, you could buy just under a gram of gold for $1. And now how much can you buy? 0.0169. So there you go. And if you had to choose a fiat currency to hold, that has done a little better than the dollar, the pound, and the euro. We'll come to the euro in a minute. It's the Swiss franc. Even the Swiss franc, though, has lost 91% of its value, but it's a huge difference over 70 years. And that's why the Swiss franc is so strong against the pound. It's gone from around 1 pound used to be 10 Swiss francs about 50 years ago. Now it's almost 1 to 1. But yeah, you can see the Swiss franc is also losing a lot of ground versus gold. But in relative terms to other fiat currencies, done well. Quickly show you the euro. The euro is done pretty much like the dollar, down 98%. And you're going to say, oh, there was no euro in 1953. Well, they just calculate the legacy currencies till from 1953, and that's how they can do it. So now I want to talk about UK house prices versus gold, because I've done several videos about it, and I just updated the ratio of the nationwide average house price to gold ratio to show you where we are in terms of gold. And what I have to say about this ratio, if there is a currency crisis, if we see a collapse of the pound to zero, I think all bets are off about this. You'll be able to buy a lot more. You need a lot less gold than this is suggesting, but be as it may, just wanted to show you this. So we've got here troy ounces of gold needed to purchase average house. And yes, I updated it to February 2023, as you can see here. So right now, and this is the chart, and let me tell you the figures. Right now you need 167.47 troy ounces to buy the average UK house, which is now at 257,406, and it's dropped from around 273. That was the top back in August last year. The lowest it's been was back in 1982, and this is since 1952. So the spike there in 2002-03, that meant that house prices were heavily overvalued versus gold. That was a good time to sell property and buy gold. I think there's still quite a bit of room here. Down to the 1982 low was 90.87. So that's what I think we need to think about. That's where I think we're going. So there's still there's still a lot of room, because we're still at 167. But as I said, if the Bank of England doesn't fight inflation and keeps rates low while inflation rages or prices rage higher, I think you'll need a lot less than 90 ounces eventually. It's going to be maybe like in Weimar, Germany during the hyperinflation. You could buy a decent house for a couple of ounces. But this should help you, though. Understanding, if you are a stacker, of course, the relationship between gold and house prices. And I'll show these two charts here. So this is the price of gold here. As you can see, it used to be fixed at £12.50, and that was until I think 1967, when Harold Wilson devalued the pound versus the dollar. And then when currencies went off gold, you can see that the gold price started rising. Right now we're at record highs. And is it any wonder that house prices have been going up as well? It's more that the pound has been going down. The pound's going to zero. So anything that's real, retains its value. But even house prices have become a bit of a bubble because I heard the other day of the boomerang generation. Young people that go to university and even get a very good job, they have to come back home because they can't afford to rent, they can't afford to buy a new home or a home for that matter, to get on the property ladder. So there's something really wrong about the prices, and I think it's a reflection of a dying currency, really. That's what it is. And we're going to come to a point where people that are looking to capitalize or cash in on their homes, older people especially, approaching retirement or in retirement to buy a smaller home, they're going to have a tough time. And why is that? Well, because there will be no transaction in the housing market, and that will be the worst thing, really. And I think that's coming. It's not even that prices are going to collapse, it's that people won't have the money to buy it, and there won't be any credit. And I think that's where the Bank of England is driving us, unfortunately. But it's too late to reverse it anyway, because they've inflated the system so much. They have to keep it going. So with that, let's quickly look at where the markets are this morning. Yes, it's Friday and it's the beginning of the month, but today I don't think we have non-farm payroll. They've left it to next week. So it's 8:15 a.m. London time. We've got spot gold at 1843. It's up just over $7. High's been 45, low's been 35. To silver, well, silver is up 14 cents, just above 21. High's been 21.08, the low 88. How much do you want to bet that when the U.S. market opens, they're going to sell silver? Well, the CFTC doesn't care, right? That it happens every day. Back to the stock market here now. The Dow futures is down 41. NASDAQ is down 25 points. And the S&P is down 5 points. Still below 4,039.76. To the fiat currencies, and they're all going to zero. So we're just comparing losers to losers here, so to speak. The pound is up 0.25% this morning at 119.78. The euro is up 0.18 at 106.13. The dollar is down 0.33% versus the yen, 136.28. And the dollar is down 0.25% versus the yuan at 690.47. Aussie dollar is up 0.4 at 67.55. And the dollar is down 0.2 versus the Canadian dollar, 135.74. And the Kiwi dollar is up slightly at 62.28. To the general commodities, we've got platinum up $6, trading around $968. So platinum is rebounding quite well. We've got WTI crude down 0.1 at 78.11. Brent is down an eighth at 84.54. And high grade copper is up half a percent at 4.10. Last but not least, let's check the bond markets. And we're going to start with the gilt market, the UK government bond market. The 2-year gilt yield is at 369. Someone asked me, I think, a question yesterday, what's happening to the 2-year gilt? Well, what happened was that last week on Friday, investing.com, they're quoting the 2-year gilt, but it was actually a 1-year gilt. It was an old 2-year paper that was issued by the government, but a year had passed. So it was actually showing the 1-year rate on the 2-year, which the 1-year rate is above 4%. So they adjusted that and they put a new 2-year gilt in there. And that's why the price, the yield, switched around. There's nothing nefarious going on, but there's still a lot of pressure on mortgage rates. I've been reading that a lot of the deals now have been taken off the table again, and that it's going to be harder and harder for people to cover their mortgage expenses, as that article that I pointed to about house prices alluded to. What about the longer term yields? Well, the 10-year yield is at 3.90, so approaching 4%. The 30-year is at 4.27, and that's gone up quite a bit. I think we got back to like 3.5 after the crisis in September, October. And let's check the U.S. Treasury market. Yeah, and recently we've gone back above 4% on the 10-year. Right now it's at 4.02. It's down 4 basis points this overnight, so that's helping a little bit. But it looks like the Fed might have to raise rates for longer, and that's where we are. So with that, I'm going to wish you all a very good day, a very good weekend. Take care. Bye.